We're going to be diving headfirst into what would be the investment opportunity of a lifetime. If you've been following the S&P 500, you know it's had quite a ride in 2023. But before you get too excited about those soaring numbers, there's something crucial you need to know. The S&P 500 has been making headlines, showing a 15.9% increase this year. That's impressive, right? Well, hold on. 2022 saw a staggering 19% loss in the stock market, and 2023 isn't as rosy as it seems. Despite the hype on financial news networks, the stock market isn't bouncing back. It's actually down by about 7% this year when you consider both 2022 and 2023. Now, let's get into the heart of the matter. Amidst the turmoil, a select group of companies is thriving, and they're all about AI. These businesses are at the forefront of a technological revolution that's sweeping the world. Let's delve deeper into these tech giants and their remarkable strides in the realm of artificial intelligence. First up, NVIDIA. This undisputed powerhouse in AI computing. Their revenue surged of 170% in just a few months is nothing short of astonishing, driving their stock to soar by a staggering 227% this year alone. This begs the question, is this the future of investing? Well, the answer might just reshape your investment strategy, so stick around for more insight. Now, consider Elon Musk's Tesla, a name synonymous with electric cars, but their ambitions extend far beyond that. With FSD version 12 entirely propelled by AI, Tesla's stock has surged by an impressive 120% this year. The real question is, can they lead the charge of the AI revolution? Not only transforming the automotive industry, but potentially revolutionizing your investment portfolio. It's a tantalizing prospect worth exploring. Turning our attention to AMD. Now, while they've faced challenges in recent quarters, they're making a bold foray into the AI arena. Witnessing a 60% valuation increase this year, could AMD emerge as the dark horse in the AI race? Time will be the ultimate judge of their potential in this evolving landscape. But it's not just these individual companies. Behemoths like Facebook, Microsoft, Apple, Google, and Amazon are all fervently embracing the AI mantra, collectively adding hundreds of billions to their market capitalization in the year 2023. Their substantial investment and interest in AI signifies a seismic shift in the tech landscape, potentially shaping not only their fortress but also the broader investment landscapes. Stay tuned as we uncover more about these tech titans and their AI-driven endeavors. Let's dissect the significance of these 8 AI giants within the S&P 500 and what it means for your investment outlook. These titans of artificial intelligence collectively amount for a substantial 27.8% of the total market capitalization of the S&P 500. To put it plainly, they represent an immense chunk of the entire market. What's even more intriguing is that, against the backdrop of a volatile market, they played a pivotal role, contributing roughly 20.7% of the S&P 500 gains this year. Now, here's the crux of the matter. As an investor, you're faced with a choice. The stock market might seem like a roller coaster ride, with uncertainty around every corner. Yet these AI-driven companies are not just riding the wave. They're forging a new path into the future. The question you must consider is whether you're ready to ride this AI wave alongside them, potentially capitalizing on an investment opportunity that comes once in a lifetime. But of course, skepticism is natural. Is this a genuine opportunity, or is this merely another speculative bubble waiting to burst? The truth is, only time will unveil the real answer. However, one thing is undeniable. The convergence of technology and artificial intelligence is reshaping industries, economies, and investment landscapes. It might just be the very opportunity you've been waiting for, a chance to be part of the transformative forces that are shaping our future. Now, let's not forget about the cruise industry, which has also been making a comeback post-pandemic. Carnival Cruises is up a whopping 97%, and Royal Caribbean isn't far behind with a 102% increase. However, if you shift our focus back to the rest of the S&P 500, things start to look bleak. Every other industry in the S&P 500 seems to be dragging the index down by over 5%. Remember, these non-AI companies make up a significant chunk of the S&P 500, accounting for more than 70% of its weight. So when you strip away those 8 AI giants, the average non-AI company is down about 7% this year. That's a substantial drop. In fact, history teaches us that the stock market rarely experiences 2 consecutive down years. But if we disregard those 8 AI stocks that seem destined for the moon, it's becoming a bit more of a rough ride for the second year running. The last 2 times the market had back-to-back down years, the rebound was impressive. In 1975, it surged by 31%, and in 2003, after the dot-com crash, it rose 26%. Now, if you've been scrolling through YouTube lately, you've probably seen those constipated faces on video thumbnails, warning you about the impending doom of the biggest recession in history. The truth is, anything's possible in the world of investing, and sometimes the absurd and the ridiculous come true. And let's put things in perspective. Remember the financial crash of 2008? It made the S&P 500 plummet by 38% in just 1 year. But in 2009, it bounced back with a 23% gain. Market exuberance during COVID-19 was indeed remarkable, and some stocks seemed way overvalued. Yet compared to the late 90s internet boom, those 2 years were a blip. When you look behind the shiny AI stocks, you'll find companies like Texas Instruments trading sideways for 4 years, or struggling bank stocks. Boeing is on a downward trajectory, and some stocks like Fiverr have strong financials but sit at multi-year lows. So if you're sitting there wondering if you missed the boat, consider this. The stock market is currently down by 25% since the start of last year. Except for the AI bubble, a 25% drop is significant. The S&P 500 has only seen such declines 3 times since World War II. Many folks are sitting on the sidelines, waiting for the next colossal crash. The ultimate disaster will wipe everything clean. It's as if we're expecting Armageddon, but the market rarely follows such dramatic narratives. Others believe they've missed the boat, thinking the stock market has rebounded, it's too late now. But that's far from reality. You see, with most opportunities in life, the majority of people don't recognize them, even when they're staring right at them. But here's the kicker. Compared to every stock market crash in history, it's never been easier to jump in and take advantage. Gone are the days of mountains of paperwork and needing a hefty $5,000 or $10,000 to start investing, like during the dot-com crash. Today, opening an investment account takes a mere 5 minutes, and you can start with as little as $10. Some brokers even provide free shares or free money just for signing up. Check out the links in the description for favorite brokers. So, why do most people miss the boat? It's a mental block. Emotions often override rational thinking. When stocks soar, people rush to buy, and when they plummet, they panic. They measure their returns in days, weeks, and months instead of looking at the bigger picture over years and decades. Consider this. Why wait for your favorite chocolate bar to go back to full price when they're already 25% off? The fear of buying a falling stock, known as catching a falling knife, paralyzes many. What if your stock drops after purchases? Well, that's part of the game. The comment section online often showcases this emotional investing in action. Many get caught up in the short-term thinking and quick gains, guided by the loudest voice rather than doing their research. But here's the golden rule. Your long-term investing success depends on how you act when others are panicking. Right now, the stock market has taken a beating for 2 years straight, and that excites. While on vacation in the middle of the Gunnison National Forest, the focus is on planning how to invest more in the coming months and years while stocks are in the massive discount. These opportunities are rare, and long-term success hinges on behaviors when others are in panic mode. Most will only figure this out once the market has already climbed back up. But for those who see the potential now, it might just be the ride of a lifetime. Now, before we wrap up, if you found this information valuable and eye-opening, please do us a favor, hit that thumbs up button. And don't forget to subscribe to our channel. Thanks for tuning in, and cheers to your financial success.